Hey everyone, my name's Andy. I'm from the Finding Value Finance channel. Today we've got Patrick with us from NorthStarBadCharts.com. You can follow him on what is that? Your Twitter is at BadCharts1, I think.
Yeah,
You guys are interested in following Patrick. So we were talking before this. We were looking at Canadian housing. You had a cool chart with Canadian housing. We were also talking about a recession. So what's your take kind of on the housing market and recession coming or potential recession, or did we already go through it? Kind of as we were talking back and forth before. What's your take on Canadian housing market and potential recession?
all right. Well, let's go with the Canadian housing market. I'll share my screen. I did this for one of our members there. He wanted to know what's up with the Canadian housing market, and I'll show you I'll show you the chart that I did. Hold on. Okay, here. I did this one. So essentially, the housing market for Canada here, I have data since 1982. This is distance from the 3-year moving average, so it's momentum. So the further you're able to go away from the 3-year moving average, it's great. But as soon as there's a rising trend line that breaks down, then momentum is leaving, and after that, you have a hibernation of Canadian house prices. So we did that in '89. It peaked, it broke down. Then after that, it went sideways, and it had a bearish cross below the 1-year moving average. Doesn't mean it's going back to zero. It just means that thing needs to rest for whatever time it needs. Now it bases here, the momentum base, the double bottom. Then you have a beautiful breakout in Canadian real estate in '99. And after that, that was a legendary run from '99 all the way to even 2007. Then it went parabolic. It hit, starting to define some resistance, breaks down from that long-term momentum. A little after, you get a close below that 1-year moving average, and then Canadian housing, they hibernate for a little while, a few years, then it creates a beautiful base. It's able to grind up, but it's not in any explosive mode. It's just above its 3-year moving average, creating a beautiful base. And then we had that crazy breakout in 2020 here, then 2021 continued. But yeah, that was a crazy vertical ascent in Canadian housing. And now it hit resistance. So the momentum is actually hitting some resistance, and it broke down from a rising trend line. So for Canadian housing, and it's about to have a bearish cross, the upwards move is done now. So people want to know, well, how long? We don't know how long. It could be short, could be extended, but the crazy upwards momentum is totally broken down for
So
Canadian
here's
housing.
here's one thing I noticed on these charts. The previous two back in the 1980s, is that 80s? If I can read that right, 80s or
89, this one
yeah,
here.
80s. Yeah, that
Yeah.
was how long was that cycle? That looked like 6 years, is it? 6 or 7 years
Yeah.
from
So
bottom to top
84 to 89,
to
85 to
five,
89. Yeah.
five
About
years.
here.
And then the last one just recently, it looks like it's from 99 to 2008 when it broke out
8.
to the downside. So
Yes.
that's 9 years roughly, 8, 9 years. And then this last one, it's only been 2 years. I mean, that I wonder, this is what I've been debating quite a bit, and maybe you can interject your opinions here, but did the stimulus money that came into the system, did it distort these markets? Because did it just pump it all in one shot and then we're going to get a little bit of a relaxation and then we run again? Or do you think this is it and we're just going to roll back over and head down somewhere lower? Because it feels like in America, at least, that we just stopped the construction cycle mid-cycle. Like there was no way that this construction cycle could respond in that short of a time frame, because we have the same, it looks the same even for America too, similar to what you've got here for Canada. And that's really what I'm trying to understand, because if you're in the middle of a construction cycle, the commodity boom should come still, and that this is just a pause because interest rates went to a level that was unsustainable for the real estate market, which is from the stimulus money that came into the system. So that's the way that I've been viewing it. But I don't think we've never had this type of stimulus come into the system, at least in America, all in one shot, given directly to people. And usually the other markets, they were paced by the housing market and the interest rates where the housing market would drag the interest rates up to a level that's sustainable. But if you pump it with a bunch of stimulus, the interest rates are going to go to an unsustainable level with all that money in the system. At least that's the way I'm viewing it. I could be wrong. But
Well, this, look, when I see that chart, when I look at the distance from moving average here, this resembles a lot the oil chart. So, and here there's a horizontal breakout line I didn't draw. So this line here probably wants to slow down to the point of retesting that support line right here. And then if your theory is right, then it's not going to go crashing and hibernate and go negative for 10, 15 years. It's going to bounce here on this resistance line, which is now support, and then move up. Because look, I'll show you the oil chart overlaid.
What about a trend line from the top of 1989 going all the way across the peak of maybe the top down? I think it's like a breakout, almost like the oil chart's doing.
Okay, yeah, here, something like this, right?
Yeah, you go across that way.
Yes, exactly.
Yes,
yeah.
yes.
So that, yes, exactly. So this could be contraction. This could be just a huge pattern. This is just probably the first pullback.
Yep.
This could be just be the original pullback to draw here. So here it's all about momentum, guys. So while the Canadian house prices keep going up, if you want to extract data, market reacts to rate of change, accelerations, decelerations. So while this thing is going up, it's not giving me much clues. But when I look at the rate of change, then I could see what other instruments try. Oh, this is a cool chart I have to show you. Remind me to show you this. It's the gold's 4-year rate of change. Looks exactly like the sugar chart or even the silver chart. So its markets are reacting to gold's acceleration or deceleration of the pricing in of your destruction of purchasing power. I'll show you that later on. So yes, if I overlay, here's the oil chart. I'll overlay, here's the oil chart right on top. I'm going to put it on log scale. Oops.
Yep.
Oh, Jesus. Where did it go? Wait, it's up here. Where'd my oil chart go? Oh, here it is. Just going to expand that. Look at this thing. So here, it's not, oil chart's going up with the rate of change of the Canadian housing. Canadian housing starts rolling over, then oil does parabolic melt up. It peaks, it crashes with the Canadian housing. Here it goes up with the Canadian housing 7-year rate of change. It dips at the same time, goes up again, dips. So yeah, look at that pattern. That's what you spotted, right? It's this thing here.
Yep.
Either that
it breaks out, does a retest, and then it'll go.
Well, if it had a chance to go back up, it has to do it now, because if this thing doesn't bounce here, then it's a deflation event. Something really bad's around the corner. We're not out of the recession yet. If this thing like goes here, this is bad there. So you want oil to stop here, and you want it to start showing some teeth, and you want it to complete its reverse symmetry move back to 2008 highs. And then after that, maybe then we have a really bad recession coming up. So that's the bullish case. Oil has not done a lower low. It has not broken below its pivot line, right? So here's a resistance, turn support. That's support and resistance. And now we're above. So now that pivot line is not, it's support now. So we have to give the benefit of a doubt that it's going to dampen that fall. So if that happens, there's a good chance, yeah, Canadian real estate might start picking up again and picking up some steam and go up.
I'm in that camp. Yeah.
Well, there's clues. You know what's giving you a clue? Silver is giving you a clue that could be happening. So let's say I remove drawings and remove indicators. Okay, so here's my silver chart. I'll overlay recessions. Silver likes to bottom at the bottoms of recessions here. See the peak? Silver actually explodes out of bottoms before the recession is done most of the time. Here, 2001, 2008. Look, imagine, because they always backfill the official recession. So right now, let me just put my date range.
I know where you're going.
That
I like it.
We've already, we're probably out of the recession, but we'll know if silver really is able to break out of here, this thing here, then there's a good chance that it's telling us that we're out of the recession and oil's gonna have a run, and all the other oil's going to bounce where we had identified that support. It all hangs on silver telling us if we're out of it or not, because silver's a recovery metal. It loves smelling the incoming monetary imbalances required to save the US equities. So we're not quite there yet. I see silver here bottom in the 70s was a little different. Silver bottomed after, but then it started bottoming here, huge bounce after that recession. So that's part of the clues we're looking at.
Yeah, I think
silver, yes.
silver's outperforming gold as well.
Yes.
So that would also it would also signal that as well. And then we also have copper that's like breaking to the upside. Copper's doing some crazy stuff too, which if it's a recession, at least generally speaking, you'd see copper dive.
Yes.
So
we'll pop up copper. See, again, guys, if we're at the recession, this is if the silver's breaking down, it's telling you that whatever people are talking about recession now, it's probably a recession that they're going to backfill, and we're already out of it. So if there's another one like that, it could be much later. And it's possible that we have a bigger recession, not like maybe in a year or two, because every time, I'll show you this, SPX divided by gold. Remove drawings, the line. Whenever SPX has broken down versus gold, there you have the bigger and thicker recessions, you have more of them. This was crazy. I don't know how they measured recessions back then, but the number of recessions prior to the crash was insane. Look at that. You see how this is probably a more natural cycle, on and off, on and off. Look at that. Look at the monetary imbalances. Look in the 60s here for Jesus, like for almost 9 years, there was no recessions at all here. So these, here I'm in an uptrend. There's only once SPX breaks out versus gold. Let me put that here. Once SPX breaks out versus gold, there's only one recession, two recessions, three recessions. But once SPX breaks down versus gold, so we're in a destruction of purchasing power cycle, look at the recessions in a short period. 1, 2, 3, 4 thick ones. On the upway, depends where my SPX starts breaking out versus gold. Look at that. We only had 1, 2 in the entire bull run for US equities after it broke out versus after SPX broke out versus gold.
That's a massive inverted head and shoulders, isn't it? In the bottom's 1980 is the head.
Yes, here, yeah, right.
Yeah, inverted head and shoulders.
Yes. Got to respect that. Here too, slanted up. That was a bullish one, slanted upwards. And here we had two big recessions. So if ever this thing breaks down, look, it's starting to break down below that line. We might have a succession of more recessions coming up. We're probably in one now, and then maybe a few other ones.
Mm-hmm.
It's
is that if you were to draw a line across this way, going across, starting at 2002 or 2003, do we have another inverted head and shoulders going across? If you draw it across like we did in the 1970s, okay. You see what I'm saying?
Yeah.
That way. From 2003, you just cut across. Yeah, like that. Yep. Is that an inverted head and shoulders?
Well, if it breaks to the upside, yes, right.
That would mean that you have a massive bull market in stocks.
Yes.
If it were to break to the upside.
Yeah. Super delicate. Super delicate. You have to look at rate of change. So if I pop up the 7-year rate of change, there's a big difference though between, this is the rate of change of the ratio chart, and it's not looking good. So that upwards momentum that it needs to, you see when it broke out here, I'll put, when it broke out here in 88, the momentum was going upwards above the 7-year EMA of that 7-year rate of change.
Yep.
Now it had a chance to do it here, but it decided to break down. So this is not looking as good as it did when it broke out. You see, when it broke out in the 60s, when it broke out right here, 1950, it was above and climbing. Now it's below and going down. We're more, yeah, there's some
I
clues.
agree.
We're more like here.
Yeah, it looks like we're
Right.
going to break down.
Well, it's looking like that. We're here. We're here. The momentum's slowing down. While here it hasn't totally broken down yet. You're not in a good spot right now. There could be in late 60s, mid 60s. We're in these areas here. We're approaching the bad zone for U.S. equities measured versus gold. So that's giving you clues that while there is a potential bullish pattern, you shouldn't be paralyzed by it, because also you got to notice that that inverse head and shoulders is happening at a huge resistance level, like huge. So this was the massive top for the nifty 50 dot, the 1960s bull era. Here's a blow off top. We're probably never going to see this again. The .com bubble outperforming gold that much. That's like, the more I look at charts, the real bubble of all time was not the market crash of the 1929. It was the .com bubble. That was the crash of all crashes, the bubbles of all bubbles, unless it breaks to the upside. But it's not looking like it's breaking to the upside, because if you look at, let's say, the NASDAQ measuring gold.
Yeah, it's super expensive too. I mean, we're way up there.
Yeah, the ratio is super high. This has definitely broken down. Look at the ratio here. It's terrible. It's like, this is like I call that the echo bubble. So here's a real bubble. This is a pullback. And that was a second bubble that we had 20 years later. And if you're not able to do a new high on the echo bubble, it's game over. It's like, I could show you a fractal of any type of charts that go ups, but like more condensed, goes up, goes down, and goes up. If you can't do a new high after a parabolic melt up, that means that parabolic momentum is definitely done. And this is telling me that.
It also, when you do, it could be a double top, and after a double top, that thing just rockets lower, where gold has a massive outperformance against stocks at some point.
It's definitely set up for that there. So here's a horizontal line. If ever, it's all about levels. So now this is the first sign, is a slanted angled trend line. Because you got to remember, sometimes you have here, I had another breakdown back in, but it was, you see the angle, it's steeper. So there's still upwards momentum, but the less and less steep there are, eventually, once it gets, after that, there's going to be one here. That's what, and then, but they're less and less steep. So as these barriers are breaking down, eventually you'll get down to this horizontal one. And once you close below that horizontal one, it's over. It's like, it's totally over. But that's definitely not looking good. So when you weigh the evidence, NASDAQ's already breaking down versus, and even versus silver, man, they're breaking down these things.
Yeah, I like that chart quite a bit. NASDAQ versus silver or gold.
Yeah, that's totally, like the momentum, the rate of change was never able to repeat its what it did in .com bubble, was not able to get back above all-time highs. That's like, we've seen these patterns now over and over. This is a massive top, massive slowdown of momentum. Because look, I'll put it on the linear chart, and now it's more apparent that it's a top.
That looks bad.
It looks bad. Yes,
that's a double top.
It looks bad. This is a massive top. This is actually a bearish expanding wedge. So what that means is it's trying to go up higher and higher, and every time it goes down, there's more money coming in. And as soon as you detach, it's not able to maintain the momentum to try to retag that severely inclining trend line. That shows that you have a loss of momentum. And if you can't always outpace that, it's very bearish, especially broke down now from the bottom line. That's super bearish. What happens here, like, I'll show you what happened in the 2000s. When you had these patterns in the 2000s, so here I could have made a case that I had the same pattern. If ever,
that's it. You know what that is? That's a Livermore accumulation silver.
Yes. If it breaks to here, that pattern, if it breaks to the upside, then it's a Livermore accumulation. That's like something totally nuts is happening, and it breaks out. I had a chance to do that here. I had a chance to do a Livermore accumulation pattern. it was in it, and then it just instead of blowing to the upside, it broke down. Yeah, it broke down. There's no look. It could rally upwards. It could come. This is probably a scenario here. Could come and try to retest that, but the higher probability thing is something. This is a more higher probability move there. This happening.
Yeah, we're expensive as heck too against all other assets. So I would expect it to struggle.
Look at that. Yeah. So while the ratio could go sideways, now you have to look at silver chart, because even if this goes sideways here, even if there's a rally for NDX versus silver on the way up, so silver could be going up, like it could go ballistic. Gold and silver could go, while this grind sideways, gold, silver and gold could go up a lot. And once it breaks down, then silver will really, really outshine gold. Silver, oil will really outshine US equities. And look here, it's like, I'll show you this, the 7-year rate of change, just to put in perspective how much the momentum needs to be digested. Silver topped, let's say, in 2011. And it started going nuts maybe in 2003. We're not even there yet. It's like the good times they're ahead of us.
Totally agree.
Like negative 7-year rate of change. It needs some time to unwind this there. Whoops, not that one. So if I put a line here, that's what I want to see. Look, until the price starts, until the rate of change starts doing something like that and does a nice base, then I'll go back long US equities when that happens. But until this type of thing happens, it's like, yeah, like that's probably a roadmap here. We just don't know how long it's going to need to get out. But once it gets out, then of course we're going to step away. But yeah, there's actually a bigger top happening there. This is
if you look at how the movements are at the top there, it looks the same as the last one. It's just compressed.
Yes,
so
we don't have that.
You can see the little on the left-hand side where you get that little ziggy zag in like 99 or whatever, 98 or whatever the heck it is. It's got the same zigzag pattern. Yep. Same thing.
That is that. Yeah, it just melted up higher here. Instead, here, these two legs, they stretch this pattern upwards. You know what I could do? I think I could
bars pattern, because I think it's gonna fall just it's gonna be scrunched up.
Yeah, well, it's like it's fractals, man. It's human behavior. Yeah, it's something like that. There can't really redraw, but I could tone it down. But yeah, it's some type. Yeah, it's a top, and it's pretty simple, guys. Just identify long-term resistance or support, and if you're below it, then that's it. Look, even here, if I put my moving averages, remove the price, remove the drawings. NASDAQ priced in silver. Look, it's the moving average now is, let me see the price. Hold on. The price is 463. I'm looking up here. 463, and the 12-month moving average is, it's totally below it. So why am I? The 12-month moving average is 570, and the 3-year moving average is 560. So it's about to have a bearish cross. It didn't have those often. So the bearish golden death cross, the distance from the 3-year moving average is totally negative now. So the price is below. Look, we're here. It's confirmed.
Yep.
We're here. This is just awful for NASDAQ. Huge loss of momentum over the years. While the NASDAQ has been going up and up, it wasn't able to, the momentum, it's not able to outpace its 3-year moving average. It explains the kind of top we're having, right? It's a dome-shaped top. It's broken down. Look,
it's done.
It's done. Look, I have some,
it's done.
Maybe we're 1994, maybe, but less, I think it's less than 2% we're there because of the rate of change of the other charts and everything's breaking down. So playing the odds that you think US equities are going to do a melt up from here is not playing the odds. There is an outside possibility that this is just a small dip. It goes back up. But until it does that, look at this beautiful breakdown on the momentum there. Look at this thing. Jesus, hell. It's like totally done. Like yeah, it's done.
I
There's no
don't think
more
it's a false
momentum.
breakout. I mean, if you look at commodities and the deficits out there, which is the inputs for all these guys, yeah.
What chart did I say I wanted to show you there? The gold. No, I guess the rate of change of gold and how it tracks other commodities. And this is just to show you guys that gold is really the gold is like the ultimate universal instrument to understand what markets are going to price in. Because every time here I put the 4-year rate of change of gold. So I just have the gold price here, nothing fancy. Everything's financialized. And look at that. As soon as I saw these twin peaks in the 70s, I know that because I've looked at so many charts. Look at the silver, look at the sugar chart. Look at this thing.
Mm-hmm.
It's insane. So when gold accelerates and its rate of change explodes, everything, commodities track it, and there's no manipulation in the sugars, or maybe there is, but I don't know. But whatever it does, it's tracking exactly the momentum that gold is pricing in. It's just insane. So if you think the sugar chart looks bullish, and it looks uber bullish, here I'll put let me just put that on candles, style, hollow candles. So here's the sugar chart, actually broke out. Now it's doing a back testing, and it's also above a retesting pull flag. So as soon as it's able to get back above this level here, there's a reverse symmetry move that is going to go bonkers. That goes in line with even here. Look, the 4-year rate of change for gold is just back tested, and it's like it's trying to go up now.
Mm-hmm.
Bullish. There's bullish clues everywhere. It's
yeah.
Look, yeah, there's bullish clues everywhere. What do you want me to tell you? Go.
It's bearish for the overall markets like S&P 500, NASDAQ, all those are bearish. And then everything that's commodity related and precious metals related is all bullish, it seems like.
Yeah, let's put oil.
Because we've broken out of big patterns, but we're probably just consolidating back down to the peaks of stuff, out of breakouts and stuff like that.
Here's oil. Oil again reacting to the 4-year rate of change in gold, exploding upwards, same time. What's impressive, oil, it did not drop that much in the mid-70s. That was probably the best asset to have, even better than silver for that. Because if you had oil, even when there was that huge drop in the mid-70s, oil did not budge. It's like every time I look at that chart, I say, Jesus, like no drawdown. No drawdown for oil.
So I think this is the problem. We had a peak oil in 1970s and it remained high because of the peak oil in the United States. And then silver and gold, I think, are more monetary driven, where we had a expansionary phase of real estate. It came up, real estate came back down in the mid 70s, then it came back up, which was a driver of monetary credit expansion. So expansion, contraction, expansion. So I think that's where it came from.
Look at this thing here. Oil bottoms. Oil bottom and start going up. The 7-year rate of change of gold bottoms goes up. They peak together. So even if gold went and did a higher high above its 2007 highs and went much higher, like I think here maybe was about 960, went up to almost 2000. Its 7-year rate of change was slowing down for its 4-year rate of change. It's 4-year distance from moving average, which is almost a rate of change, but its momentum. Gold was not able to do a new high. And same thing for oil. Oil was tracking. And look at that. If gold is really bouncing here, you have to assume that if gold's distance from 4-year moving average is bouncing here and potentially breaking out, then you have to assume that oil is just about to turn the corner. It's just about to turn the corner. So while people are looking at deflation and huge recessions next year, that's all the comments I get. Patrick, how could oil go up? It's the recession. The oil never goes up in a recession. That's the rhetoric I keep hearing, but put on the side. But I'm telling you, maybe we're whatever recession you think we're in, it's probably done now, or it's about to end.
Yeah. And so another thing that a lot of people always say, just to go off your comment too, they're like, well, the yield curve's inverted. I'm like, well, what if it inverts a lot more?
It's
it
like,
doesn't mean it has to, uninvert immediately. It can invert, just like it did in the 1970s.
yes, yes. So that's why with ratios and extremes, it's fine, but you can't trade that because it could stay there for a long time. What you want to play is the actual when it uninverts and then there's a clear trend change, then okay, it's fine. But to play just to try to catch a falling knife or catch a shooting star, you you can't. You have to wait. As a chart trader, your advantage is to play these breakouts. And this, I'm really, really excited about this line here. And seriously, the bounce it did here, if that holds, we're in great shape. Great
Well,
shape.
another thing, it's not just gold though, because gold's doing well, silver's doing well, and platinum's doing well. Platinum is
Yeah, let's put,
generally an inflationary type metal. So if platinum's outperforming gold, that generally indicates that we're in an inflationary environment. And
wow.
it also indicates that the stock market and NASDAQ and all those other ones are going to underperform the metals.
That's right.
There's a big,
Look at
big
this.
study done.
Wow, look at platinum, how well it tracks the 4-year rate, the 4-year distance from moving average from gold. It's insane.
Yeah.
And it's front leading it. So it's all the stuff, they're clues, guys. Look, platinum trying to break out. So this is giving me confidence that they're all the stuff we're talking about, maybe in 2-3 months max. By the end of Q1, I think we could have the signals that are going to give us the huge measure moves there in a crazy amount of time. And then because everybody's doubting, by the time people catch on by 2024, we're going to be already at our targets, and then people then we have the insane recession there, like later.
Another thing to think about, and I know a lot of people don't really think about this, is there are so many people in the recession camp, they're all in cash. And if you look at kind of the cash on the sidelines, it's at all-time highs. This spells that all these people, when they figure what we're figuring out, they're just all going to FOMO in at some point. Because if the cash is on the sidelines and they're out of the markets, well, they're not going to be selling. The cash is already on
That's
the
right.
sidelines.
That's right. It's fuel. That's why I
Mm-hmm.
see there's precious metals bull era or commodity bulls era are born with a high DXY. They're high when everybody, it's fuel. So as the DXY unwinds, it always, it's that money coming back in, but it's not coming back in the US equities as much as it's going to come back in commodities, because that SPX has broken down versus PPI, SPX has broken down versus gold. That's telling you that even if they both rally up, oil, gold, uranium, they're all going to outperform. Oh, we could look at uranium now, maybe a little bit.
Yeah, yeah,
It's
yeah.
crazy because look,
Uranium
how
looks
many
good.
of the how many of these charts now? Sugar tracks this, oil tracks this, silver tracks that. Let's see if uranium tracks that, and I'm pretty sure that it will. What should I put the uranium trust?
You could do URA. I know it's, or you could do Sprott Physical Uranium Trust.
Yeah,
Yeah,
well, let's put Sprout for now.
there's not a lot of data on it. It's the only thing.
Where's my regular? Look at that, but still it tracks it.
Yep.
Okay, I'll just remove the
It's just a
platinum.
banshee. It moves massively.
Look at that thing up. Cannot do a new high here. It follows the momentum. And oh, it looks like it wants to break out. People were scared a lot here because
Oh,
Cameco was looking to roll over soon.
it
And
looks good.
looks like, yeah, so the Sprout looks pretty good. Looks like a beautiful bull flag that it's trying to break out right here. Let's look at Cameco.
Camco looks good. I'm very bullish on uranium right now. Very, very.
Yeah, I see it's starting to turn up. There was a chance because this looked like a topping pattern slowing down, but if it could do a Livermore on us,
Livermore. Yep.
if it could do some type of craziness here. But yes, this has to hold here. This line here, if this thing doesn't hold, I get scared. But when you look at the evidence, when you look at the 4-year, again, distance from moving average for gold, oil trying to break out, silver trying to break out, platinum trying to break out.
Yep.
Which one did you say? Copper? Let's look at copper.
Copper is already taken a leg higher here. I think it's right. If you draw a trend line across, it looks like it's on top of everything and it could run. The diversified mining companies are already running. So
look at that. Look at copper. It's tracking that thing to the. Look at this thing. Jesus, man. This is the Rosetta Stone momentum. Look at that.
mm-hmm.
Jesus, hell. So the pullback in copper is probably done.
It could be. Yep.
Could be done. Look at it. Yeah.
And
so
generally, if you're going to have a recession, copper dives. So it seems to me like we're coming out I know China's done a bunch of stimulus and the reopening, so I would imagine that this has a lot of upward pressure on all these commodities.
Yeah, look, I think that we've had a micro recession, and whether they label it as a recession or not, it doesn't really matter. The price of copper went down. They all had these spikes down. It's done, guys. Look, it's already starting to turn up there. So, like, I'll put copper straight up. We could identify some lines there, but hollow candles, move drawings, move indicators. It has to get back above here. This is a scary line here. If it gets above this line, we could get really bullish. Because that's gold. Gold also had this type of line, but gold or silver had that same type of line, and it did go above it. So here's a silver line, the equivalent. You see, it's what I call a wall, previous support and resistance. Silver actually went back above it. So now that's support. Look, we're so close. I don't want to call it officially because I really want to see that line close above. I could put the quarterly chart. Quarterly chart, I had it super, super clean. It's like, I could zoom in, guys. Look, this line, you get super, super bullish above this line here.
If we do break above that, and I call that a bloody nose, big tall guy with a little down day. But which is a continuation pattern higher. If we break above that, what are your thoughts there? Is it like game on? Like it's good to go? This is the time to be ultra long, so to speak.
Well, okay, here. If it breaks out above this, that's probably the last slanted and not very severely declining trend line that silver has to break above. After that, the crowd's going to get in here above. So this is early. What happens in the early spot is the probabilities increase that you will have enough momentum to bust through the final breakout line. But worst case, what it could do is the backtest from up here and then move up. And here is, so I know 28 is the final one because that wall, you cannot deny it. That wall, as soon as we close above the 28, within 6 months, we're above all-time highs. Within 6 months. So if in February, in March, we close above 28 silver, by the end of the year, we're above 58, above 55, name it. It's gonna rocket. So this is this move up here, it happens above 28. So now, if you want to take a position, people definitely here, we get a close above 25, right here on your, any close above 25.50, 25.60 on the quarterly close. So by the end of March, if silver's at 26, people could start having fun there. But there could be some opportunity cost if it requires a little bit more time. So really the time, if you want to reduce time to go crazy, it's above the 28. But look, I'll show you this chart here.
Is that a cup and handle pattern by any chance? If you look at it, because it comes up, it hits it, and then we're doing kind of almost like a cup and handle on a slideways, kind of does that make
here?
Yeah, that one. That's like a cup and handle, right? Yeah.
Yeah. Well, it's definitely some type of
or it could be that. Yep.
Look, it's coiling. It's coiling above a huge wall. This base, we didn't break out of this base for nothing. Seriously, when gold broke out in June of 2019, this base was not meant to be broken out of and just fall. It's the same thing as it's the same thing as this type of breakout here.
Yep.
Broke out, retested, maybe a false breakout here on the quarterly, and then it retested. This is the same setup, or maybe it depends where I started. And here, breakout, back test, look, higher lows. It's the same thing repeating over and over again.
Yep.
And people could have waited maybe for this line to break out. This is maybe the equivalent of our 28. Let me remove these lines here. So this could be probably the equivalent of our 28. But yeah, it looks pretty bullish. And when you take that into the macro chart defined context of the NASDAQ breaking down versus all the commodities, SPX about to break down versus all the commodities, it's already broken down versus PPI, then you have to weigh this as continuation patterns, which will probably break out to the upside. 80% chance they break out now to the upside, maybe higher. at least 80%. Right now, where we are, at least 80%, this eventually breaks to the upside before it breaks to the downside.
And I
Maybe
mean,
higher than 80. I don't know.
and more evidence too. Like if we start to see silver break to the upside, you're going to see GDX and SILJ and some of these other ETFs. They're going to start to outperform gold and silver. Do you think that's the potential case here? If we were to get that moving, because I know
Yeah.
GDX and SILJ and all these other ones, they are really cheap in relationship to gold and the underlying physical metals. Like they are just really, really cheap.
Yeah, honestly, the metals are just off. The miners are just awful, awful, awful. If you can't time them, they're just terrible.
Agreed.
Because look,
Agreed.
since 1970, gold has drastically protected your purchasing power way more than miners. So this is the precious metals fund, gold and silver miners. It's just been down and down for forever, right? So you, as a precious miners trader, you want to play this. You want to play this move up here, and then the breakout here. But you're probably going to want to get rid of your miners once you hit that rising trend line. It might be done to move there. So that's probably the upside in holding miners. Maybe here this if it breaks out after that, fine. Let's say there's a paradigm shift and miners for some reason they decide to outperform gold, fine. But here's probably going to be a great place to take profits because that's also a wall. Well, look, what happens with these ratio charts is a ratio chart's supposed to oscillate in between, but sometimes there's just some macro landscape changes where it cannot oscillate at the same range that it does. So it just creates a new type of channel. Like here in the 70s, it had this type of channel where it bounced. Once it broke below, people are always looking for it to come back to the all-time highs. But if it cannot do it, then it's creating a new channel. And if it breaks below that channel, it could be creating just a new paradigm of relationship between the metal and the miners, right? Until, let's say, it does prove us that it could close above this line here, then okay, then you could start imagining your miners trying to get to a better ratio versus gold, but they're not there yet. This move here has not been enacted. This move here, this reverse symmetry move here will get enacted once it closes above this line. And this is probably the early breakout line. Once it gets above here, you could start getting excited.
It's got a long ways to go though.
Yeah. Look, holding the metals, you saw all the metals, you saw the platinum, you saw uranium, you saw all these metals, they track gold. So like I'm a big metals fan. If you're gonna own something, own ounces. The miners, they could be fun for trades, but seriously, look, I'm trying to think about this a lot, but miners, they're pumped a lot. I don't like that word pumped, but people always mention 10,000% move in my miners, 1,000% move in my miners. The metals did 100%. So the miners are always better. But the miners still underperform drastically the metals over time. So unless you're able to time that with the miners, the metals also a sure bet, because you could have as much profits buying the metals, just buy more metal, just take a bigger position size in the metals, and you'll make as much money in a safer manner. Because gold, there's no CEO for gold where the CEO runs away with the girlfriend, right? There's no bad exploration PE analysis or whatever they do, the miners that could crumble them at any moment, right? Gold's the safest bet. Platinum's the safest bet. Silver is all these metals. They're the safest bets to play a commodity bull era because they'll go up, they'll track gold's momentum. While the miners, you could choose some miners and they could suck for the whole bull era in commodities. And you're going to say, Jesus, I spent 10 years in that miner and it didn't even outperform. It's possible that.
It's probably likely.
Yeah, exactly.
A
right?
lot of them are bad. There's so many.
Yeah, they're terrible. Look at this chart. Even the precious metals fund where they get rid of the bad crap and they put in the good stuff. This is a fund. It's like an ETF. Even that is not. It's not good. I'm sorry. This is not good, guys. This is not good. So you gotta. I'm on the fence on these miners there. It's like I don't mind if there's a bullish setup. I don't mind playing it, but thinking that they will give you better returns than just buying the metal, I'm not sold on that. Because I could just buy more of the metal and I'll make as much money, right?
Yep.
Look at chemical. Yeah, that's showing some teeth there. Look at this
Camco
thing.
looks good.
Oh,
Yeah,
that's not bad.
I
That's
know.
not a bad looking pattern.
I
If
know.
this thing breaks out, it's go time.
It's a massive flag pattern or something. It's
Yes. Yes, look at this here. I'll put my volume profiling and we'll see. Because that was drooping. This is not pretty there. This is like sloping. This is not good at all. But if it gets back above this line
well,
here,
yeah, the last trading day was a pretty big day, and I think it was breaking a downtrend in the very short term. I know the short term is less valuable than
oh,
longer
yeah,
term
yes,
stuff.
yes, here, this candle, yes. Oh, that's
Yeah,
bullish.
yeah,
Yeah,
we're breaking out to the upside on it here in the short term. So I think that's why people are getting pretty happy because we're starting to get that momentum and that pop higher. So, yep, that's what we were
it's
seeing.
gonna come and challenge this now. So
Yep.
yeah, we gotta see what happens here. But if it gets above this line here, then then we're gonna put your background there. You should draw a moon, a rocket ship
Yep.
heading to the moon behind you.
Well, hopefully I'm this is pre-moon. We're pre-moon right now.
Yes.
I'm getting ready for it. And hopefully that's the case though, because if we're seeing gold and all these other ones start to come up, hopefully that means they're usually the leaders. Gold's taking a move off its bottom. Uranium's starting to move. I see a descending wedge on oil. If you kind of look at the we'll call it the short medium term, you got this kind of big descending wedge where oil I think will eventually break out, and then I think we're game on. You almost had a little inverted head and shoulders there too for the oil to SPX ratio on a shorter term time frame. But
This this is one I want to show you for the
Mhm.
yes, yes, it's starting to there was a descending triangle above a support line, which could be very bullish or like almost a wedge. This is the SPX to oil, and I'll overlay the silver chart. And this, I think silver tracks even better the oil to SPX ratio. Look at this craziness.
we're so the one thing I
So
noticed
here,
on on the oil, the black lines, I should say, if you draw a line across, you have an inverted head and shoulders. It's like a massive one, uh, going from 2015 or so to the right.
there, this.
Yep, that's what I've been tracking.
Yes, 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 yes. That's a
Potential
beautiful
inverted head
setup.
and shoulders. It's massive.
So we just need, as soon as that right shoulder starts
Yep.
breaking upwards, we're gonna sit in the gold chart, like all these other charts that you see that track the momentum, all that. They're gonna start confirming that that move's legit, and the crowd's probably gonna start waking up here. And there's probably going to be a lot of talk of recession and depression when gold actually breaks out here.
Yes. Yes.
Look at this. Look at silver in the 70s. This is
Yep.
insane. Look how silver just tracked to perfection the oil chart versus SPX to perfection here.
And silver generally leads oil. So if you look at silver's move, it led in the
Yes, it did here. Yes,
1973 and stuff. It leads
yes,
it. And what is silver
yeah.
doing right now? It's basically
It's
moving
leading.
higher. So I'm
Yes,
like, I'm getting ultra bullish on oil because oil's still down and it usually
yes,
lags gold and silver.
yes. You know what's good? Yeah, there's some oil charts
Mm-hmm.
I was looking at, and they're great. They broke out I think a month or two ago. Now they're pulling back. Let's put a what TK tankers. I don't know. Do you have one you want to look at, or
For what?
is it
The
TK?
shipping companies or
Yeah, yeah,
TK tank?
shipping. The shipping, yeah, the shipping are good. Is it TK? Who was I looking at recently, or was it
Uh,
Frontline? I can't remember. The whole
Frontline's a
bunch.
tanker company.
Yeah, let's put
Yep.
Frontline.
FRO.
Frontline. Frontline. Here we go. I'll put the so Frontline. Look at that beautiful base, that double bottom.
Yes. Looks great.
Huge volume node here. So double bottom above the moving averages. Is that thing breaks out, man? Look at the upside is just
Yep.
it's just nuts there. Probably have a target here at 40. And I don't know if it's going to get that up here, but if ever gets above that line that I have, I'm going to
Looks like
put
a
here a reverse.
inverted head and shoulders to some degree, much like
Yes,
oil.
yes, there.
Yep.
This is not stretched by any means of the imagination. This is not Nas. Look at these things, man.
Mhm.
It's bullish, huge
Everywhere.
bottoming
Oh
pattern.
man.
It's like, even here, if I go on the shorter time frames, although I'm going to put just a regular. Look at that. That was a base above the 3-year, 1-year moving average breakout, retesting the 1-year moving average from above, huge volume node. So
Yep.
everybody who wanted to load up or sell, the transactions have been done here. So here it's going to vacuum. So when that thing closes above anywhere here, there it's going to start sliding. So if that thing could stay above $14 for a little while, that thing's going to go from 14, 15, all the way. It's going to double or triple in Jesus, like
Short time
in a
frame.
year,
Yeah.
in 18 months, it should be double. Like that's a beautiful move. Then we get the big recession. Then we get the real crash, But
I agree.
that's definitely the move. I could have but they're all like that, guys. Like
All of them.
all these
The,
patterns.
the Baltic Dry Index is like it. The oil stocks, natural gas stocks, like they're all of them are showing us the same thing. It's all
Yes,
linked together.
could put an arc if you like arcs here.
Yeah, little.
The arc is just to visualize, guys. It's just lower lows, downtrend, higher lows, uptrend. That is just to visualize. It's like you don't even need that, but if it helps you see where, and it's telling you how fast that thing's going to go, man, when it goes up. So look, oil, it's about to turn. We're waiting whether there's a big drop down to 60, 70. I don't know where, but as soon as it starts turning up, 150 is the target, 140. It's like, that's where it's going.
Yep, I agree.
And all this stuff is going to go bonkers also.
Yeah, Baltic Dry Index, everything. They're like your whole portfolio is just going to go. It's going to get shifted up, but it's tough to nail the exact bottom. So you kind of just have to wait for it to bottom out and turn.
Yeah, we're close. It's like when I see a price of a chart, like let's say silver, so close to a quarterly defined breakout line. They don't happen often. It managed in a 6 months. It was like we're down, I don't know, 15, 16. It was the end of the world. And now it's hogging that breakout line. So you have to, we're like the tiger that in the bushes or the lion, and we're just waiting for the gazelle to go in the open plain. We're going to catch her, man. It's like, we're right there, man. Look, we're not breaking down. We're trying to break out.
What about like your take on a recession? Do you think that's kind of like behind us, or do you think we're just kind of exiting out of it? Maybe at the first stages. Because I know everyone's bearish. Everyone on Twitter, everyone on YouTube, everywhere I look, it's like bear. I'm like, they can't be right. I'm sorry. You can't have everyone be bearish and have them all be right. It just never works that way.
Yeah, the recession, it looks like it's done. We're past it, and when silver breaks out, that'll be total confirmation that the recession is totally done. And they're probably, I'm sure they're gonna, if they decide to backfill it, like they're gonna backfill that whole recession. They'll backfill it. They're going to miss the beginning and the end of recession by the time they tell everybody that that's what happened. But at the end of the day, I don't even care if they label it on the chart or not. All I know is silver tagged, oil tagged, that's recession type of contraction, market pricing in that. And now if they're breaking out, that's all I need to know. So guys, if you're waiting for IMF or the Fed to tell you anything, you're 2 steps behind. You'll be like the crowd. Like gold broke out in June of 2019 and bottom in 2018. It bottomed, broke out in 2019. Inflation was going down and people weren't going to gold, and people bought gold as CPI was going up. People, I need to hedge my purchasing power. Guys, it's too late. Gold already priced that in. And same thing now. Gold breaks out. Okay, I could show you this chart again. Gold actually breaks out when. Sorry, Andy.
I was gonna say, I think you're gonna catch a lot of slack here because a lot of the recession guys are pretty on top of it. Like they're persistent. It's because I'm getting more bullish, and everyone's like, it's almost like, no, you're wrong. It's gonna do this. It's gonna do that. Like they know so well, but I'm like, gold's breaking out, copper's breaking out, guys. Right. This is like the beginning of the move. So
that's right. Listen to the metals. No, the metals. No, don't. I'll show you another crate. Okay, so here is it's crazy. Look, another inflation rate tracks also the rate, the 4-year rate of change for the 4-year, the distance from moving average, I could put the 48 for gold. So again, all you need to do is track here, guys, is the inflation rate. Yearly, look at that. Look how it tracks the gold's distance from 4-year moving average. There's no mystery, guys. Look at that. So if gold's breaking out here, that we're probably going to start getting some CPI ratings that are probably starting to go up there, lagging. There's no, this is the Rosetta Stone, guys. It's momentum, momentum, momentum. Use TA tools to spot momentum. You will never be able to spot that with somebody telling you a beautiful story. You will never, like, you can't spot this stuff without looking at a chart, unless you're really astute. Maybe like Andy is able to figure it out on his own, but it's tough. CNBC will never tell you this. They'll never figure it out.
I use TA. I do the same thing you're doing. It's the same
I
thing.
know.
Just different ways of looking at it.
It's good though. It's to have different. Look at here when gold, when CPI broke down. I'll show you on the gold chart. 4 times out of 5. Look at this. The exact bottom for gold was when CPI was breaking down. If I was a CPI guy, oh no, CPI is breaking down. There's deflation. Gold, what did gold do? It just shot up. Yep. It just shot up.
Well, another thing is we have a massive trend line break. If you go all the way back to what's that, 2008 or so, and you draw a trend line all the way across on your inflation rate, you know, if you just draw that trend line there, a lot of the times what happens is you break out, you have a big, powerful breakout, you kind of get a pullback, and then we rock it again. Yeah, so I mean,
look, it's beautiful.
Yeah, yeah.
We're here. This is the retest.
Break.
It's where
you'll come back and then gone.
By the time let's say CPI keeps going down for a few more months, 3 more months, gold's already going to be probably above all-time highs, or I'll be breaking out. That's what's going to be happening. And then after that, look. So yeah, this line here is a historical pivot line.
Yep.
And if it survives this line, there's no deflation, guys. We're off. Yeah, it's weird, right? It's so kind of,
that is going to leave so many people in the dust. That is going to leave so many people because they are all so bearish, all in cash, and that's all future fuel for what could potentially come.
Look at this thing here. I think also look at that. Look, when CPI was breaking down, guys, in October of 2008, CPI had topped, breaking down. Look what gold did. Exact bottom. So, man, this is not my war against fundamentals, but fundamentals always come second after price. Have fun fundamentals, but respect the price action.
Gold's the leader. Inflation's a big fat leading indicator because that's measuring it through, it's filtered through the entire system of consumer price index.
Yes.
So gold is telling us that we could be turning and heading up. And that's why I'm getting all bullish as heck, because I'm seeing gold. Everyone else is like, what are you getting bullish for? What about this? It's like, guys, it's moving and we're going to break here soon, any second. Like that is when you're a chartist or when you're looking at technical analysis, the first step, break a trend line, break a pattern, break something. And it's like, okay, we're getting in motion now. It's getting some momentum. You get the big fat candlesticks that are strong closings. That's when I get excited. That's when I'm deploying money, buying. Everyone else, they're like, well, I don't see anything. It's like, you will, just wait, but you're going to be 40, 50% later.
Right. I'll show you exactly what you meant there. It's this, me there in hindsight, of course, gold. Look, see that strong, almost Marubozu candle, guys? It closed above this line, closed above this line. This was this line, this candle. I'm in love with that candle because it's a huge base. This was a once in a lifetime. I don't want to say it, but I'll say it. Bet everything here. This is not when nobody's talking about gold. This was a once. This, you want to get a high probability play. It doesn't get better than that. It doesn't get better than that. So if ever we get some type of Marubozu candle above here, some crazy beautiful candle like that above here, that's the second last time you'll get that.
Yeah.
Unfortunately, I'm happy it's taking 2 years to build out that because I'll trust it more when it breaks out.
Yeah, and gold looks really strong in the short term too. So it could get up there pretty quick, I think.
Look, it's above its wall. It's above. This looks like a false. Seriously, this looks like, honestly, I'll show you this one here. The 2008 break. Yeah, see 2008, how it broke down here?
Mm-hmm.
It's the same
Slingshots,
pattern here
like,
that it broke down.
yes,
Yeah.
same thing.
False breakdown and then upside.
Because everybody gets short and then
So
it
this is
squeezes
possible, but
everybody.
I'll, I'll tell you why this slingshot here is way more bullish than this one, because this slingshot happened. The SPX had not broken down versus PPI yet. Now this is happening while SPX has broken down versus PPI.
Mm-hmm.
NASDAQ has broken down. NASDAQ was not breaking down here. Now it has. So this is way more bullish than here. As bullish as this was, this is even more bullish because now you have the macro landscape where gold will outperform so much.
It's even more bullish than that. You know why? Because we're also getting the bond market to break down. And that's a bunch of money looking for a safe haven. A bunch of money.
Yeah.
And if that starts breaking down, that money flow is just going to go and gold's this teeny little market.
Yes.
Can't absorb
And
anything compared to the bond market.
And the US dollar's above 100, like fuel. So if there's no deflation, it's all good, guys. But we're playing the odds, and the odds are now that there's oh man, it's like just weigh the evidence. Like Jesus.
Another argument for inflation is they have so much debt they need to inflate that debt away. So they're gonna pump it. They got to.
Yeah. Well, and we have historical precedents for that, right? They've never taken the let's let everything deflate, and that's never. It happened in the 1930s there, but that was short lived. I don't know if we're gonna have an episode like that again.
They took the gold, took it back, and then they increased it by 50% the price.
Yeah.
So they did inflate
to try
to get out of that.
Yeah. If it was on the free market, gold probably would have went maybe higher to offset that. So look, I'm not too worried about all the setup there. It's gotta let the market play out what it's gonna play out, and TA is gonna get us in, and also get us out. Right when we start saying YOLO, when we start saying to the crypto guys, have fun staying poor, then maybe it's time for us to exit. Right?
Yes. If you hear anybody say that, what's your favorite asset right now, you personally?
Well, I think silver right now is really about to do something special. So yes, silver is going to lead the way, like you saw also there. So if silver breaks out versus gold, the GSR is going to dump. I think silver squeeze 2.0 is going to come up, and hopefully, look, I don't want the media to talk about the stuff I'm in. I hate it actually. When CNBC starts talking about my stuff, it rubs me the wrong way. You know, it's like I like this being under the radar for as long as possible.
Yeah,
but definitely silver, uranium, but they're all completing their pullbacks, these things, you know. So as soon as their wedges above their important breakout lines break out, choose your poison, because oil could do very, very well. Uranium and silver, they should do very well. Gold also should do well. It's like all that stuff should do well there. But
and then if you add platinum, you've got my portfolio.
Platinum, yeah, okay, yeah. Some people are blaming me.
That's it.
Patrick, how come you're not looking at platinum more? Well, okay, yeah, platinum, put it in there. Yeah, I love platinum also. It's like you saw that pattern, we drew it, a huge pattern there. It's about to break out of a 20-year pattern or 10-year pattern from 2011 or 2008. It's like huge
it's all great.
Breaking out or about to break out.
I'm excited. Might take a couple more months or something like that to get moving, but I'm excited. I like it. Uranium's looking better. It's good. I'm happy. So what do you have anything else? Any closing comments or anything like that?
No, I think we're covered a lot of stuff today there. So it's all good, Andy, man. Hopefully people are gonna like that. And all these recession guys, man, show me the evidence, guys. Stop repeating the news. It's too late if you repeat the news from the mainstream TV.
All right. Well, that's all I've got. Yeah.
That's it. All right. Let's close it up, man.
Appreciate you coming on, Patrick. I really thank you for coming on. And guys, check out his website, it's northstarbadcharts.com, right?
That's right. Yeah. Or
and check out
Bad Charts 1 on Twitter. That's fine also.
Bad Charts 1 on Twitter. Yep. Check them out. All right. That's all we've got. See ya.